You know it. Yeah.
Hello guys and girls, how you all doing? How is the trading week going on for you guys? In this video I am going to show you the trade that I took for a lot on Gbpcad. Actually it's a very nice trade, it's a fantastic trade, but then it still has its flaws. I'm going to show you how I took it and then what I feel I should have done in this kind of scenario. So without further ado, let's dive straight into it. So guys and girls, here on the weekly, like we broke this thing down on the previous analysis that I dropped here on my YouTube channel. If you haven't watched it, make sure you go back and watch it so that you even know what we plan in advance before this setup materialize, so that you can learn from it. Now we have this high right here. We have this value area. Look at the gap that is in this place. Now when price created this value area, look at that, it was a value area that previously take out this value area. So this value area triggered this value area, which make it a very high probability zone. So when price sold off, price came multiple times, but then it failed, it left a gap, and eventually it sold off for a very long time, take out a lot of structure loss, and eventually it came back into that area and then take that liquidity out. And then look at that weekly commitment right there. Look at that weekly commitment, but then probably seeking more liquidities, and then price was now gravitating again towards the value area. Now the most interesting aspect of this setup is the way that we approach the value area. Now if you can see it right here, we have the 1, 2, 3 drive. Even within that we have 1, 2, 3 drive, which is again has a middle section, right? If you can see, we have this one internally right there. So we knew in advance that it's very unlikely for price to sell off from here because of the value area, because of the fact that it is very close to that area. So we were actually anticipating for price to take out this area, get people caught on the wrong side of the market, to now start looking for the entry once it commits. It did commit, but then it fails to progress, and now price came back up again. So when price is up here, actually we know that okay, we're in a value area to start looking for the sell. So for now we will still be looking for the sell, right? Which is why I was actually looking for the sell on this setup. Now if you go to the 4 hour, what we have right here is this. When price take out the area, look at the way price take it out, right? When price took that out, it sold off, right? Then it came back up, it gravitated towards this area of liquidity. Now the most important aspect of this place is that look at the momentum that was coming out from this place. So we can agree that this is institutional move, right? Now price came back here and then it tagged that out and then it dropped again, right? Now when it dropped again, it left another footprint right here. It was now this footprint that okay, this is potentially good for the sell-off right now, so we'll be looking for insurance entry. Because of the size of this setup, there's no way I was looking for risk entry on the setup, so it was only insurance entry that I was actually looking out for, and that is what I said on the previous analysis, right? Now if you look at this area, now we have this one. Then we have this one. Now look at that, we have the impulse correction. One of the reasons why I wasn't willing to take it as a risk entry is because of the size of this continuation. It's almost the same size with this impulse, right? So I was looking for the first commitment, which we have. Look at that 4 hour evening star formation. We have that first commitment, and then I was looking for this continuation to now take the sell. Now if we look at the intricate confluences on the pattern, which is more interesting, like this is a very brilliant setup. It's just in one of those ones that doesn't play out. Now we have the middle section, as you can see right here. We have a middle section. Good. We have a middle section, as you can see. We have impulse correction, impulse correction, impulse. We have the 1, 2, 3 finish, right? which again in the form of 3-touch channel, as you can see right there. We have that 1, 2, 3, and we have a middle section again. Now look at the setup: 1, 2, 3 middle section, 1, 2, 3 middle section. Now if you look at the pattern, this is a complete pattern. Even the bigger one was a complete pattern, and the internal one again was a complete pattern. Coupled with the fact that we have tagged into this area right here, and now look at the momentum. Now look at the volume, look at the price movement that actually came from this area, right? So this is a good setup if you ask me. Again, there's still something to learn from it. Now look at that first commitment. Now if you measure the first commitment, if you measure that impulse leg, as you can see, this is just within the 50% zone, which is great again, right? So now actually I took this for a 1 hour entry, and I'm going to show you how I took that. Now on the 15 minute, we were actually looking for this area right here. We're looking for this area, and then here we have the bottom right there. So I took it as a 1 hour entry. Initially, when we have this close right there, we left the gap. So I was waiting for price to fill out this gap, which it did right here. But then I was like, okay, you know what? We have this one right here. We have this one, and price could actually move from here, especially with the fact that we have taken out the first one. So when we have this retrace close right there, though the retrace close again was more or less like a rejection. Look at that wick right there. I think that's one of the negative confluences there, which again, looking back into the trade, I feel I should have avoided the trade because of how we closed around here, and then because of the gap that was left around here. But then what I did was I set my order here on the break. I was like I set my order just below the close of this week, because I felt like if price is going to commit here, at least we could end up this place before we go up to the upside. So by that I would have moved to break even by then, right? That was like technically 1%, so I would have moved to break even by that. So which is why I set my order. One of the other ways I would have actually taken this trade would be like this, but then I feel it was a bit unsafe, right? So because of this area because of the gap that was left here, I feel this one is a bit unsafe. So I was waiting for this one. So I still feel it is as a risk entry, although it's more or less like a reduced risk entry. But then I have a reason behind that, right? Like I said, I don't take reduced risk entry, but this one is more or less like a reduced risk entry based on the confluences that we have. So for me, I entered the trade right there. I set my order right there. I put my SL just above here, and then my take profit was actually targeting this low right here for targeting this low for almost 8%, right? I was targeting the low for 8%, and then it tagged me in and then it tagged me out just immediately. Now what I would have done better on this trade would be something like this. I feel definitely because of the setup, 1 hour entry was actually the bare minimum for me. So what I would have done better on this trade would be adjusting this lower trend line. As price close here, I will be expecting this one to be a retrace candle. Then I could set my order. Let's say it closed as a retrace and it closed around here. Set my order around there. Have like 15 pip SL, which again would have been a great setup. Like in terms of risk reward, again, this one would have been better, right? As you can see, 10.8%. So this is exactly what I would have done in this scenario. But then looking back at the trade, it is what it is. I have to take the lesson and move on to the next one. Guys and girls, hopefully this one helps you, because like look, it's about being patient. If you know what you are doing, like yes, I made a mistake here in terms of executioning. I should have waited a little bit more. Maybe then I would have avoided the loss. So it is what it is. Now going back to the next one, I feel okay, yeah, we are ready. Now on the challenge again, I took this trade on the challenge, so I lost 5 USD out of the 10 USD. So I have 5 USD left now to take one more trade, because the plan of the challenge is whichever account we have to risk the 50%. Probably in this $5, I'm going to be risking maybe 2.5 to gain maybe $10. So once that is done, or maybe to gain $5, and then that will take the capital to the $10 again, and then we'll risk 50%. Whatever we have, we need to be risking 50% of it, right? To target minimum 2 to 1 ratio. So that is the plan. Now I took losses, so I have to scale down to 2.5 USD on my next trade, so that I still have a lot of, you know, stuff to play with. So that is the plan. So guys and girls, hope this one helps you. See you on the next one.